Good morning, everyone, and welcome to the Quantum Leap Morning Leap session for Friday, August the 19th, 2016. It is triple witching options expiration today, so it should be an interesting day. My name is Doug McKay. I am the founder and head moderator of Quantum Leap Futures. Each morning we get together to take a look at the market macro to micro, take a look at the structure of the market, then we drill down to our trade levels, our trade targets, and our hypotheses for the day. We usually create 3 to 4 main hypotheses. The reason we do this is we want to look at what the opportunities might be based on the market action, and then what we can do and what we can expect and trade based on that. That way we're not trying to think of what we're going to do on the fly. We've already got a plan of action in place. This is a subscription room, so I'll put up the contact information in just 1 second. Please read through the disclaimer. Nobody at Quantum Leap is a certified trading advisor. We are retail traders operating within a self-organized learning environment. Past performance is not indicative of future results, and any trades that you see in Quantum Leap are for education purposes only. Please trade your own due diligence, your own trade plan, and your own risk metrics. Okay, so taking a look at yesterday's action, of course. Let's just put up my contact information first. Sorry. Send me an email, quantumleapfutures@gmail.com. There's no website. There's no blog. This is not a commercial venture. It is a self-organized learning environment. You could contact me on my phone if you want, or send me a Skype contact request. I'll be the one from Windsor, Ontario, Canada. If you like this video, there's over 400 days of videos of these pre-market sessions up on YouTube. And if you like what I do, please follow me on Twitter @crazy2. So yesterday, as you guys know in the room, I did not have Transact was down, and I didn't have data for my charts. I did have data for my DOM and my execution platform, but one of my rules is if I do not have all my technology working correctly, I'm not going to risk money in the marketplace. It's more of a psychological thing than anything. But I could have traded without my charts, but I don't like going through the day not knowing where we are in terms of value and VPOC and VWAP and midpoint and IB and all the things I used to trade with. So I just chose not to trade. But I did put 2 hypotheses in the room. One was a failed breakout, my main hypothesis, and then a rotation down into the prior day value and come down into the 69.50. We got the move up, and then we failed to get inside of the value area, and then we just sort of chopped around at the high of the day, creating this very weak high here at the 84.50. But there is a phenomenon I want to talk about that we have to keep an eye on today, and that is the fact that in 20 years, I'm just going to go to the daily, in 20 years, we have never had more than in 20 years we've only had, sorry, it's not daily, it's weekly. We've only had 2 instances where we had bullish weeks more than 7 in a row. And right now, we've had, in this last run-up, we've had 7 weeks, 1, 2, 3, 4, 5, 6, 7, and we're on our 8th week. And only 2 times in history, in the 20 years that I went back, that we've had more than 7 weeks of bullishness. So we're on our 8th week. Our week open is 21.80.75. That also happens to be at yesterday's VPOC at 20.80.75 and just above the value area low at 21.80 1/4. So one of the most important levels today is going to be 21.80 and 75, because if we close below there, that will be 8 weeks of bullish weeks in a row, and that'll be the 3rd time. And then, there's only been one other time that we've gone beyond 8, and that was 9. So we are getting ready for a pullback. Can we add on more? Can we keep going? Sure we can, but historically that has not been the case. So we have to start looking at the possibility of this being a bearish week or the next week coming up. So keep an eye on that 21.80.75. But let's just step back and let's just take a look at where we are. I like to look at where we are in the trend overall. I start with the monthly, of course. You can see that we're getting continuation on the month. We don't even challenge the trend until we get all the way back down to 2091, almost 100 points off of the all-time high right now. So the trend is still up on the monthly. The weekly we just talked about. We do have good slope and good separation. We can still have a bearish week and not challenge the trend until we get all the way back down to 21.48 1/4. So still have the possibility of going higher or having a bearish week, but still maintaining the trend. Going on the daily, you can see that we're holding the 9 right now, but we're losing slope and separation. So we're starting to go sideways here and seeing some possible weakness. We're coming down and challenging the 9 EMA, which is sitting at 78 1/4. The 20 SMA is at 72. Remember that 72.50 is a key line in the sand for us below. So we are seeing some weakness coming in. Going to the 4-hour. Now, I wanted to point something out here. We've got a bit of a head and shoulder setting up on the 4-hour, and I'm looking at the neckline, down here at the multiple touches at the 75 1/4. So if I draw a extension, okay, for the reversal pattern, the 61.8 extension takes us right down to our week low down here, not weak in terms of weakness, but the week. Our week low is 21.65.50. So that's the primary target to the measured move, and then the 100% takes us down to the 59.50 area where we have that composite microcomposite VPOC, as well as the naked VPOC down there as well. So I thought that was interesting that we're setting up, here's we'll just take a quick picture of it so we have it in the room. There's the left shoulder and right shoulder, and let me just take a quick picture of this and post it into the room for you guys just to have it as reference. All right, but the overall trend is being challenged too on the 4-hour. You can see that we're below the 9 and the 20, so we are going sideways, and we have a possibility of starting a downward trend on the 4-hour. Going down to the 1-hour, you can see that we do have slope and separation. We did leave a naked cross right here at 21.81.75, so mark that down on your journal as a possibility. If we get above the 21.79 area, look for them to possibly come up and retest this naked cross up here. But the overall trend is down right now. We've got good slope, good separation. Going to the 30-minute, same thing. We've got slope and separation. We're losing a little bit of slope, and we're challenging the trend right now. We're above the 9 currently. We could come up and fail off of the 21.79.75 or the 20.80.75 at that VPOC. Going to the 15-minute, you see we had a good strong trend down. We do have a naked cross on the 15-minute at 82.50. And we just left one below us as well at 77.50. We are challenging the trend, violating the trend right now from the downside, and getting a possibility of starting an upward trend. And I'd be targeting, if we continue, I'd be targeting the VPOC, of course, in the week open at the 20.80.75, but I'd also be looking at this naked VPOC that we left above. Naked cross. Going to the 5-minute, you see that we've got this consolidation pattern going on right now. We are starting a trend to the upside. We do have a naked cross on the 5-minute as well at 77.25. That gives us all our naked crosses for the time being. I consider this one to be closed already because we came up on this candle right here and came within a tick or two of it. And, I feel those are good closes overall. Anyway, so we got an start of an upward trend here. Let's just take a look at the structure of the market now. We continue to trade inside of this balance. We've got 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11 days of balance. We did leave a abandoned baby here. So this is a topping pattern. But the only caveat to this topping pattern is this is only the RTH session. And usually in candlestick, you're using the full sessions. But some people are saying that it's a valid abandoned baby. So that is a topping pattern. We've got other reasons to believe that we're going to get a pullback. The last 3 days, the most accepted price is the 79.50. So we have a 3-day microcomposite VPOC here at 79.50. But the overall balance and microcomposite is still at the 77.50. But we're getting a little bit of a double distribution here and likely to chop between these two as we fill in this low volume area between the two and mature the auction and accept value at one of these two levels before we probably break out, but you never know. You can see that the 3-day and the how many days? 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12. The 3-day and the 12-day value area are pretty much on top of each other. They're within three ticks of each other and right at the CLVN at 75. So I'm going to be watching this 74.50 area, and if any break below that, I'm thinking that we've got an interim top in and we're likely to come down. Now, when I say interim top, I'm not talking about a major reversal. That could be it, but I'm talking about a intermediate top for a trip back down into this area down here that is from the 53 area to the 67 area, which we have a lot of repair work to do that we'll take a look at, and back into this balance area that we just broke out of 13 days ago on the breakout day. So a move back into the longer time frame. I think we're at 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15, 16, 17, 18, 19, 20 days of balance, a very tight balance that is centered around that 2160.75. And the last price that they accepted before the gap up and the breakout was the 59.50 area. And then if you go to the daily, and we go down there into that area, look at all the repair work we've got down here. We've got the 69.50. We've got a naked close at 64.75. We've got a naked VPOC at 64.25. We've got the microcomposite VPOC at 60.75. We've got the naked VPOC at 59.75. We've got a naked close at 59. We've got naked VPOC at 53.75. We also have, that is down in the gap zone. If we bring up the flex levels, you can see that we've got this gap zone that starts down here that we dipped into on that week low. That ranges from the 66.50 down to the 63.50. So we've got this this gap area down here. Taking a look at overnight. Overnight we went back and we banged on that 84.25. Again, we've got a week high overnight. We got a week high yesterday up in the 84s. We just got a VPOC shift down, in the last 90 minutes down to this lower distribution. We have a double distribution profile from overnight. So taking our overnight high, which is all the way up at 84 1/4. Oops. And our overnight low right now is 75 1/4. It is also a weak low. We put a low in here at 75.50 and 75 1/4. So we came down within one tick, but it is a weak low. Now we could put a lower low in before the open, but right now it is 75 1/4. And then we have the LVN zone, and it is a zone, runs basically from the 81.50 down to the 79.50. So I'm going to be using the 79 area. Our open yesterday was 78.75. I'm going to use the 79 as an actual trade zone. If we get above it, I think we'll get a move up to test the value area low and the 80.75 weak open and naked VPOC from yesterday. We're going to have a fairly large, what's the gap? Gap is we closed at 83 1/4 and we're currently trading around 78, but that may change. But just as it is right now, well, we got a 5 1/4 point gap. There's the probability of closing that gap is in around the 24, 25 area based on the size of the gap. So that's all the information that we really need from the overnight session, 77. And remember that the 77.50 is right at that 9-day microcomposite VPOC as well, and that's why we're finding balance around there. And it's one tick below yesterday's RTH low. So let me get rid of this, expand this out. So for me, 70, as I said, the 74 area, 74.50 is, from 74 to 75 is going to be a trade area for me. And just FYI, it's also our month open. But it's going to be a key line in the sand. Because if we get below it, then I'm looking for, and I'm targeting, first of all, the 72.50. It's also going to be a trade zone. You know what? No, it's going to be a target, 72.50. But I will look to possibly get, the 72.50 was where the VPOC or the CLVN shifted from. It shifted from 72.50 up to 75. So I have been using the 72.50 as a key line in the sand. I'm moving it up. I'm targeting the 72.50, and really the next big target below is going to be 69.50. Our daily ATR, 20-period ATR, is running at 14.1875. So off of the high overnight, our downside ATR target is 2170. Is it? No, that's not right. Sorry, I might have wrote the wrong number in. 84 1/4 minus 14.1875. Yeah, it is 70. I don't know why I didn't move it. So we have our daily downside ATR target at 70. Off of the current low, our upside ATR target is up at 89.50, which also happens to be, I mean, look at this. Our daily ATR targets are basically sitting on top of two naked VPOCs that we left open. And that's interesting. So, and then below that, all the targets remain the same. We've got a lot of repair work that we talked about down there. So upside targets. Again, I'm going to be using this 79 for a move to at least test the 80.25 and then 80.75, and then above there we've got the 83.25, which is our open, but we've got this, kind of an F pattern, and the closing swing low was at 82.25. So I'm going to use 82.25 as a trade area. This is not supposed to be there. And then above that, we do have the 83.75 with the overnight high at 84.25. I'm not going to try to enter there. I'll be long by that time. I'm going to be using the 84.50 as an add-on. If we break above the 84.50, that I'm targeting that 86.25 naked close, and the next big target above up here at the 89. There is a little bit of a resistance at 85.50, so we have to move this up so that we incorporate that 85.50. So you don't want to be long until you're above 85.50 or add into it, because we might just pop above the prior day and get a false breakout and fail here at this CLVN at 85.50. And then you got 89.50, 93.50. Of course, our all-time high is at 90.75. And really, we get back in this area in the 90s, I would just be holding on for the 2200. Remember that we've got the megaphone, that we drew above up at the 99 area. That's the upper trend line, and then the downside one, I thought it was at 65. Did I take it off my chart? Yeah, somehow it got erased off my chart, but it's at 65.50 on this low here. I'll redraw it later. Try to get through this. I'm running long right now. Okay, so let's talk about hypotheses. Well, they're really not going to change. I am looking for a open auction in range or an open test drive. Open test drive will test the 77.50, 77.75, and the 80.75. But I'm expecting an open auction in range or open test drive. I'm expecting quite a bit of chop on the open, a push up, take out the 21.80.75, try to push through, and somewhere between 82.25 and 83.25, I'm looking for responsive sellers to come in and then break us down below the week open and push us down into the overnight low at 75.25, chop around at the month open, and then get continuation down. And my main target below for hypo 1 is down here at the 69.50. Maybe a possible late day probe down into the 67.25 to 65. Remember, 67.25 is the value area high of this 20-day balance that we were in. And then that is hypo 1. So hypo 1 is large rotation, open auction or open test drive, and push up and somewhere failing. Now, we could even, and part of hypo 1 will include a possibility of a false breakout and move above the 84.50. But if for hypo 1 to really work, I'm really looking for the failure to happen somewhere in the 80 to 82.25 level and fail to close that gap and then come down and rotate. Hypo 2. Hypo 2 is an open auction in range. A push down, either a false breakout below at 77.75 or a push down to test the key level and the month open and the overnight low, and then find responsive buyers and push us up into range, into value, taking out the 80, 75, and chopping in this area for the rest of the day with maybe a late day probe up into the 86 and a quarter, maybe 89, but I think that hypo 2 takes us up into range and we chop around in this area between the 77 and 79 area and testing both sides of the 3-day value, which goes up to 84.50 and down to 74. So basically just another day into the end of the week chopping around. We do have quite a bit of open interest up in the 2200, so hypo 3 is an open auction in range. Failed to take out the low or just dip below it. Rotate up, chop around up in the 83 to 84 area, and then break out and push up into the 89. Chop up here, and then make a late day probe up in towards that 2200. How high we get, I don't know, but I would be hypo 3. I would be expecting a new all-time high. Oh, I got these extra letters in. All right, and then hypo 4 is the opposite of hypo 3. So hypo 3 is a fail to break out of range or just a false breakout, find responsive buyers somewhere between the 77 and the 74, and then up, chop, and then push through for trend day up into the 89 with a new all-time high put in. Hypo 4 is the opposite, open auction, failed to get into value, or just get into value, take out the VPOC and fail, and then push down very hard with a strong impulsive wave down to test the 72 to 74 area, chop in there, and then push through and continue down and come all the way back down into the balance down in the 60. It will take a trend day to do it because our daily ATR target is so tight, but it is expiration Friday, so you never know, how far they're going to try to move it to cause pain on either side. I expect large rotations today, so be careful. Do not get stubborn. It's going to be two-sided trading, and they're probably going to make a move early and then go sideways and then make another move later on in the day and test both sides. So I'm expecting some wide range trading in terms of the harmonics, which have been really, really tight. The harmonics have tightened up to like 2.5 upside and 2.25 to the downside as our average rotation. Anyway, that's going to complete our pre-market session. As always, trade well, trade safe, and we will catch you on the flip side.